All right, welcome back for another episode of Carnivore Trades. Today is Wednesday, December 28th, 2022. If you're not done so already, video thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, market's down again today, down 1.15% here on the spiders. Triple Q's down just a little bit more, 1.29% currently. And it's a bit of an interesting day. I said this market's a complete mess here, and it kind of, I think that really fits the bill here. Really all over the map. If you guys are newer, maybe haven't been trading for a year or more, this type of action in the last week of the month is very abnormal. This type of volatility at any rate here. The volume is very light, especially the last 2 days, obviously. I kind of came up with the hypothesis or thesis last week that a lot of the big boys did a lot of their selling last Thursday, and that's where we got that big dump from, and then that recovery, obviously. And, we're seeing the markets kind of sell off on light volume. I do think retail is kind of doing their tax loss selling to an extent. We talked about this yesterday. Stocks like Tesla, Nvidia, kind of the retail darlings, AMC, GME, these things all got crushed yesterday. And you see Tesla getting a little bit of a relief bid here today, up just under 3%. So finally showing some signs of life. And we're seeing a little bit of a rotation here. I said earlier on Twitter, if Tesla holds up, then I'd expect XLE and possibly XLF to kind of rotate the selling here. And the reason for that is, you take a look here. We've been saying this for quite a while, right? Like Tesla itself is, it's like a tumor. The fact that it got as big as it did in the S&P 500, like the sixth or seventh largest company in the S&P 500. He said, well, if the air ever comes out of this bubble, it's going to be like a tumor on the market and it's going to drag it down. And you got to look here. We're down 60% or something like that. 300 down to almost 100 here. 66% just about since September 20th. And we're down 40% since December 2nd. So, but the market itself, it's down, but it's not like horribly down. And I think that's because they're bidding up XLE. And if you remember about a month or two ago, I said it's possible they keep Exxon, Chevron, Conoco, the XLE type stocks elevated into year end. Why? Well, part of the reason why I mentioned last night, there's window undressing going on here. These hedge funds, they don't want to put, hedge funds, family offices, they don't want to put a stock like Tesla or, God forbid, ARK or something like that that's been absolutely roasted this year. They don't want to have that on their end of year report because prospective clients are going to see that and they're like, oh, what? You owned ARK, so I'm not going to invest with you. What's the only sector that's really done well all year? Energy. So they're going to kind of keep that held up until the end of the year. So I think we probably see, and you guys know my thesis hasn't really changed. Yes, we're seeing some selling here. I still think we get a January effect rally, and I think that, the NASDAQ does get a nice relief bid here. That does not mean, go all in for your long-term positions. I'm talking about a relief bounce. And it could be a pretty fierce one. Bear market rallies can be fierce, as we know. But I do think once that year rolls over, they won't have as much incentive to keep Exxon held up, especially XLE. And, maybe we get down to this trend line finally. I still think these energy stocks are in backing and filling mode. And you could see the triple Qs finally get a bid. So you see a little bit of a rotation here. But the reason they're keeping XLE up, with selling Tesla and selling all these other tech stocks is because they don't want the market to crash, right? Because then that's going to cause panic and they're going to get stuck holding these trades. Anyways, that's kind of my thesis here for the end of the year. Also, interestingly enough, we are into that master level, that 260 level, that's finally coming back into play. Remember, we talked about that a lot in October. So that being a major area of support here. And just for you guys need to familiarize, that is going back to the pivot in September 2020. So that is a major pivot. That is what was defended in October twice. And then, of course, we bounced off the CPI there. And now we're hitting that again. I think there's a good chance this holds here. Doesn't mean we can't, maybe gap down tomorrow, before rallying up. But it does look to me like this market is pretty much pinned here, especially the spiders. We talked about the collar trade yesterday, JPM. Again, it's a worst kept secret on Wall Street right now. But, you see where we are. And you just look at the ES, 3808. And, they've really just kind of kept us every time we get too far away from that 38, 35 level. they kind of bring us back in. So that's kind of what I'm looking at here. I do think we can test 37.90 possibly tomorrow on the ES, which would be, again, a test of that pivot low here. I do have a bit of a minor cycle date for today. And again, that would just be basically just testing, if we did hit that, today or tomorrow, which we probably won't hit it tonight, but if we did hit that tomorrow, essentially you just basically be testing the last pivot, which we talked about. There was a minor cycle there as well. So right in this kind of wheelhouse this week, I am expecting a bounce. You guys know that. It may take until the new year, though. Again, there's, the markets are still obviously under pressure with lots of tax loss selling and window undressing. But take a look, the volume on the futures and both the spiders is not heavy. It looks like retail is doing their house cleaning right now. So I don't make, I take this selling with a grain of salt. The market, spiders down 1.2% on the day, with just over 50 million shares traded at 3:55 p.m. That's peanuts volume. So there's no real conviction in the selling. Take a look at the VIX too. I mean, the VIX is up like 2% here. We're not seeing a robust sell-off here. So I wouldn't make too much out of it. I wouldn't get too excited to the bear side. There will be a time that we will short this market again. We've been doing it very successfully all year long, but I don't think this is quite here. Could I be wrong? Absolutely. If we break this pivot here, especially on a weekly close, if we close below 373.61, yeah, then I think you're headed right down to 365, maybe 360 on the spiders before any sort of meaningful bounce. That is certainly a possibility. I just think at this point, probabilities dictate that does not happen, at least until I would say mid to late January. But I don't want to get too ahead of ourselves here. And again, not a lot of volume here, so it's hard to make a lot out of it. But we've had a lot of volatility here. And just look at the big swings here on an intraday basis. This is not typical last week of the year price action, but this has not been a very typical year. So we'll leave it at that. Anyways, triple Qs. So 260, that's your level to watch. A weekly close below that is major problems. Also, we're watching this green bar low here. So I'll just remove those lines for you. So 263.03. That we are currently below now. If they save that by the end of the week, that would be a positive here moving forward. So keep those levels on your radar. Russell is on the weaker side as well here. Again, we'll be watching this on the weekly close as well. I'd like to see it stay above 171.05 on a weekly close. So that's the level there. And then the Dow also holding up okay. But again, the Dow leading is not a bullish indicator. Just remember that for the big picture. Semiconductors, SMH, still under some pressure here. This does want to go test 197. We're very close to it right now. I think we got there today, actually. Yes, I take that back. We got to 196.54. And then we have that gap fill right around, we'll call it 194 there. Oops, there we go. So yeah, 194. There's also a 618 right below that, if I'm not mistaken. Yep, so 193. So right in this wheelhouse there's good support. You can see right here anyway, this was the area you last broke out of. This is where you chopped underneath and then we pushed up, back tested it. So there's a good amount of support here coming in to play for the semis. Again, we'll see what that does tomorrow, as that 200 level did not hold. Obviously, we got like basically a 2-day bounce and then a little rollover. So we'll see what we get tomorrow, but I do think that is good support here for the SMH moving forward. IGV also on the weaker side. This just continues to kind of grind lower here. You are coming into this little level here. We just got there today. The official gap fill is 242.80. So we'll see if that gets tested here. Again, cloud a little bit on the weaker side, just like everything else here. But yeah, grinding lower, and it is into some support here. So we'll see what it does tomorrow. Anyways, transports, again, kind of backing off here. As long as you stay stay above 13,475 on a weekly close, this is still okay. Currently, we're below that, but this will need to get saved. I know the airliners were under pressure, specifically Southwest. Look at that beat down there, down another 5% here today. This is into some good support, though. We'll see what it does tomorrow. I may get a bid here. This is a little oversold. And, I mean, it's not unwarranted. I think these all are going to go lower no matter what, but I mean, yeah, so they canceled some flights. I mean, it just seems a little reactionary to me, but that's just my take on it. UAL, AAL, all holding up reasonably well. So the rest of them are kind of hanging in there. Delta starting to dip down, but Southwest obviously taking the brunt of it. Anyways, 10-year here, so continuing higher. So the 10-year should probably run into a little bit of resistance here. right around that 39.50 area. So we're getting close. TYX here. Again, it's inching up to my level. I said 40 to 40.50. Had a nice bid there today. You know, it would have been nice to hold that TMV a little bit longer. I'd be up like probably 20-25% at this point. But, you know, I told you guys that buy signal on the 30-year, that worked out really well. And we're getting a nice bid here. You can take a look on the weekly, going right into that breakdown area right there. There's also the green bar low. So we're coming into resistance. I do think that is due for a pullback here in the next couple of days. But yield's still pushing up. And then onto the 2-year, this is very important. So yesterday we talked about this inside bar. That did fail. And I'll zoom in for you. You can see it right there. It tried. So I logged off yesterday and I said, look, you know, they can get it back up there, and it pierced it in the last 10 minutes and then it closed back below. So technically that is a failed inside bar. So that's not good. That does mean that, you know, I give yields here, the 2-year specifically, well, the 2-year note, not the yield. I'm going to give that a negative bias here. And we really want to see it stay above 102, 105. So this green bar here. Otherwise, that means the 2-year yield is going to go higher and the Fed's going to have to do more work. That's going to be very, and I repeat, very problematic for the market. So not a good look there for the 2-year yield. Market's just closed here. Looks like some type of a 260 pin at the end of the day. Again, very light volume. We're not going to make too much out of it here, but that is a master level for the Qs. Anyways, XHB, ITB, both lower on the day, kind of losing this little bullish structure here in the short term. You did have kind of like a micro sort of bear wedge there, but you know, the trend is up on this, at least in the near term. So again, it's still holding up better than a lot of other things. I do think this has one more run in it. I don't know how much higher it can go, but I do think this gets a relief bounce. With everything else here, VNQ on the softer side did not make new lows though, but basically an engulfing reversal from yesterday. I do not like VNQ at this level. XLF, believe it or not, actually it's holding up better than most things, at least for today. JPM actually scratched out a gain, up 55 cents. Berkshire was down 71 basis points, but again, it's well off the lows here. And you look at the spiders, you know, it's basically very close to the lows, 376.76 closing print, and the low from last Thursday, 374.77. So we're basically, you know, almost exactly $2 away from that. Whereas you see the XLF here is actually still has kind of higher lows in play. Now, again, this is still a bearish inside pattern here. So, you know, you're high, you're just kind of stuck in this little channel. So technically this is still bearish. But on a relatively short-term basis, it's still holding up. I still think we got another little push left in us. I will be shorting this again, but we got to be patient for it. I do not like financials moving into 2023, but again, I do think we get a January effect rally pretty much across the board. Anyways, broker-dealer, same thing. Not a great pattern here. Down move, inside bar, bear wedge, not a good look there for broker dealers. Ultimately, this will go back to 420, then 400, then ultimately make new lows, but for now, it's holding up. Energy here, so onto crude, a little bit back off pattern here today, so down 1.19%. It did pull back off the highs yesterday, and again, I'm not convinced that it's put in a low here. I would like it to make one more little dip with some heavy volume before I call any sort of low. But again, it's hanging in there. It's just a lot of chop shop here over the last month. We'll see what it does here on a weekly basis. I wouldn't do anything with it at the moment. We kind of mentioned XLE earlier. Again, it's holding up well, but clearly that level here, this pivot low, so 87, 89, we'll just call it $88. That has been resistance here. So we were unable to get above it yesterday, and we backed off it pretty sharply today. So I do think this kind of bearish, so down move, and another kind of bear wedge type pattern there. I do think that plays out to the downside eventually, as I kind of mentioned earlier, and we get a little rotation into tech. That's how I think the January effect plays out. But again, energy's still holding up better. The trade's not over with. It's just doing backing and filling. XOP, same thing, kind of rejection off the 220 moving average yesterday, and then today down 4.46%. So that does look like it wants to get down to that 120 area. There is a gap fill at 125. I think 120 is a little bit better of a level though, but the more consolidation this does, the more juice it's going to have to the downside. So be aware of that. And then OIH backing off of that trend line. So we drew that in yesterday. And again, it backed off here, a little gap up and then a reversal today. Again, this still has to go lower, but for now it's holding up better than most things. Nat gas, take a look here. So Got to that 450 area, I said would be pretty decent support, and we got a nice bounce there. And this trend line here, which goes back to 2021, that's 1, 2, 3 tags of it. And you've gotten some nice reactions off of that. So we'll see what it does here tomorrow. So that could be a little bit of a level for nat gas. I just don't like that it broke and really kind of violated this trend line. The one thing I will say, usually when you have a trend line that holds up for this amount of time, I mean, we're looking at, like 2 years here, over 2 years, 2.5 years of this trend line's held up. A lot of the time, the first break of it will be a fake break. And then you get kind of, maybe a lower high or something like that. Then the next time it actually pushes through. So it could be something into play here, but I do think nat gas has a nice chance to get a bid. It does need to get back above 482 though, which would be the low from Friday. If it can do that, then I think you can get a nice little push up here, maybe to 550, maybe $6 even. But nice little reaction there off that interesting little trend line on Natty. Dollar index, again, this just continues to basically do nothing burgers every single day. You do have a micro kind of inside bar. I wouldn't make too much out of that though. I mean, weekly, they're defending the 50 MA. I do think this still has one more leg down though. Again, nothing has really changed on this. Gold here, again, holding up really well. It is kind of making like higher lows here. You got to watch out. Just be careful that this doesn't start to make a rising wedge. So we'll just be on watch for that. I don't know if this is not even really the best pattern yet, but it could play out that way. I do think it does want to get up to about 1870, 1875. So again, nothing has changed as far as that is concerned on that front. Silver also backing off a little bit, but the pattern's fine. It's just very overbought here. And I would also watch here as well for, that type of a just ascending kind of rising wedge type pattern. You don't want to see it make those higher lows, higher highs, because then it's going to tell you that buyers are getting exhausted. And again, you guys know I'm in the camp. It is going back at least to 22, maybe even 21 here. But for right now, it's holding up. So we'll give it the benefit of the doubt. Platinum backing off here, a little bit of a nothing burger. You have a bullish inside bar off the trend line. So again, platinum holding up. Okay, we'll just leave it at that. Same thing with copper. Nothing has changed here. It does need to fill that gap from the other day though. And then Bitcoin really kind of stuck in this range. I actually think if you want to, you can short this. I really like this weekly setup here. Big inside bar. I like the pattern here. Very small narrow body bars inside of a weekly inside bar. So I think if you want to take a short at Bitcoin, this is your chance here to take it down to about 10 to 12,000. So we'll see what we get moving forward, but I do not like this pattern here. The only thing that's really keeping me away from it is that if we get a January effect, Bitcoin could possibly participate in that, because I would assume a lot of retail is tax law selling this as well at this point. But regardless, that is a good pattern there if anybody wants it. Anyways, yeah, just to wrap up here, again, spiders down 1.22% on the day. We might want to go down and test that low again. It's hard to make a whole lot out of it. There's very light volume here that does not signal heavy institutional participation, which makes me take everything with a grain of salt here. Either way, I do think we kind of get stuck in this range until Friday. Once the new year kicks in, I think we get a relief bid, and then it'll be time to short again. But anyways, we'll get there when we get there. You guys take care. Come find me on carnivoretrades.com. Talk to you all tomorrow.